Please welcome to the stage Amir Nooriala, who is the CSO, the Chief Strategy Officer of OakNorth AI. And he's going to be talking to Emily Nicolle, who is the tech editor of City AM. Please come up to the stage and thank you.
Here. Where do we go?
Hello, Amir. Nice to see you.
Thank you. How are you?
I'm good, thanks. I just rushed here, so a bit hot. Sorry, everybody else. But
and the smoke's not going to help, but no, all good.
You're right. So obviously, it's been a big year for OakNorth. For those of us in fintech, it's very obvious to us your journey, your success. Almost everybody knows your name, but for those in the room who aren't familiar, what is OakNorth and how and why was it founded?
Sure. So OakNorth was founded by two gentlemen called Rishi and Joel, Rishi Kostler and Joel Perlman. They're serial founders. They started their previous business in 2002, and it was a equity research shop. And they had a very good business, positive cash flow. They were profitable. They had signed contracts with major banks, hedge funds, asset managers. And they went to a bank in the UK, High Street Bank, to get some debt financing. So they didn't want to dilute ownership. They just wanted to get some debt to grow the business. And the biggest loan they could get offered was £100,000 secured against one of their homes. And obviously they turned that down, and they realized there's an opportunity here, but let's take this business to the end and then we'll revisit that. So when they sold they scaled that business up to 3,000 people. They sold it in 2014. And then they thought, let's go back to that previous problem we had and see if we can set up a bank that focuses on entrepreneurs like ourselves who are running a scale-up business, cash flow positive, profitable, don't want to dilute ownership, and just want some debt financing to fuel growth in that business. And that's what OakNorth is. It's a company that's been set up to finance those kind of businesses. In the UK, we do it on balance sheet, so we're a fully regulated bank. Outside the UK, we license our platform to non-UK banks. And in the US specifically, we have an arm called Flow, where we also actually originate loans as well. So we have a team of originators based in the US who are originating and servicing the loans, and then using our tech platform to do the credit decisioning. So long answer to a quick question.
Yeah, and what about your involvement with OakNorth? I understand you're currently in the strategy role, but you started somewhere else.
Yeah, so I joined 13 months ago to be the scale-up COO, and I spent my first year doing that, so focusing more on day-to-day operations of the bank. And then, a few months ago, the subject was broached, but last month I took over the chief strategy role from Joel, one of the co-founders. So I've got basically the complete opposite role, where now I'm focused outwards in terms of partnerships, investment, acquisition, incubation, basically non-revenue outward role.
And OakNorth is known, at least in the fintech world and probably in the startup world, as one of the few tech companies that has managed to achieve profitability pretty early on and maintain that. How have you managed to get that sustained profitability within a few years of launch?
Well, I mean, I think fundamentally we've got a different business to the majority of the famous fintech names out there, which are very much kind of get as many users as you can type businesses. Because we were a balance sheet lender from day one, you want your loans to be profitable. So it's a very, very different mindset. So the business has been built ground up to view everything under a commercial lens. I mean, to give you an example, when I was COO, we broke down every single activity or interaction with a client into the number of minutes of work it would generate for our ops team. And so sometimes we'd work out it would be better kind of cost efficiency wise to give a client a better interest rate that would cost us more, but that would involve less interactions with operations, because then therefore the operation cost would go down and the overall cost would be lower. So everything we've done has been with a commercial lens, and as we've scaled that and been successful with it, it's garnered more headlines. But what I would say the biggest difference is fundamentally we're a balance sheet lender. It is a different business. And even when we've had investment come in, we've still managed the business in a frugal way. We've been very much kind of that Amazon mold of, take the hinges off a door and make that into a table. and sweat that as long as you can before you move on and get a fancy table. And that's, everyone in the office understands that. We're all kind of equity owners in the business, and we all understand that every pound we spend needlessly is a pound that's against our margin.
But now I guess you do indeed have a fancy table, right? You've moved to a lovely new big office in Soho.
Yeah, I mean, we've got a few nice tables, which we, tut-tut anytime anyone bangs a chair into it and scratches it. But we do still have a few frugal tables as well. We've got a mix, is what I would say.
And so a lot of the excuse that a lot of startups use when they're trying to talk about the question of profitability is that we're in high growth mode.
Yeah.
So that's where all our money's going. We're not taking anything in if we're not putting it back out. But you've managed to somehow balance the two there. How do you target growth in a sustainable but fast way?
Well, we do take the same kind of data-driven approach of what do we want to do next, but we don't do things for the sake of it. So there has to be, it can't be just because it's cool or fun or interesting or let's see what could happen. It always has to commercially make sense to the business, while also the other key facet is not distracting us. We have a very, very clear ethos in the business. We're here to provide debt financing to SMEs around the world. And we will do anything additional to that fits within that. So when we launched mortgages, the mortgages were demanded by entrepreneurs who are saying, you've done an assessment of my business and the cash flow, and you've given me a loan on my business. It'd be great if I could also buy a house now and benefit from my business without having to take a lot of money out of it. So it's everything we do is still narrow focus. We don't want to be a universal bank. We don't want to be a company for everyone. We think there's a big enough market in terms of what we're doing. And so that makes it a lot easier to apply a commercial lens to any decision you make in terms of how much is this experiment going to cost? What is the target addressable market for this specific new product? Yes, it's worth taking that risk.
And while a lot of favorite tech startups like Monzo, Revolut, etc., are now spending the big bucks on trying to achieve a brand that everybody knows, branding is super important these days. Why is OakNorth different? You haven't really tended to do a lot of the big splashy ad campaigns, or how are you getting that reach while also maintaining a recognizable brand? I
mean, that's a question we get asked a lot in terms of why do you not spend marketing money? Why is everything you do, as Val would tell me, there's a difference. PR is earned, while marketing is bought. And our focus is on earned. We believe that if you found a market that is underserved and you are solving that problem, it will grow organically, it will grow virally. And if you think about what we're doing in terms of lower mid-market lending, if you're not aware, is, let's say, £500,000 to £20 million. To get to a multi-billion-dollar loan book, you don't need to lend even tens of thousands of loans. 1,000 loans will get you to a multi-billion-dollar loan book. While if you're doing a fintech retail app, you need millions of users to get a kind of a cash flow of billions. So we don't need a lot of people, and we're only really focusing on profitable, successful businesses that want to grow. So when you're a niche, you can do very, very specific PR and events in that space. And then what you find with entrepreneurs is, entrepreneurs like to gossip. They like to talk to each other. And they'll say, I've got a great bank, they're financing me, you should go speak to them as well. And they'll end up selling our business for us to other entrepreneurs as well. While in retail banking, you get that kind of verbal spread a bit less, and you need to do paid marketing. So it's a different clientele, I would say, as well.
And so this year, you've raised $440 million from SoftBank, which is obviously one of the biggest and hottest investors of the moment. You're one of the few companies in fintech and in the UK to get their investment. What do you look for when you're choosing an investor? And do you think the fact that you're a profitable company is appealing to them over others in the space?
Yeah, I mean, that's a great question. If you look at SoftBank in general, the majority of the business they've invested in aren't actually profitable. So that's not a criteria for them.
Exactly.
All I can say is I don't know what their motivation is, but I don't think profit is a motivation for them, for who they back. In terms of us, one of the things that Joel and Rishi have really kind of ingrained in me from the beginning was when you get an investor in, you should be just as choosy as they are. You should be asking that investor, what are you going to do for me? What doors are you going to open for me? What is your exit strategy? I mean, you get VCs who'll do seed money, but they want to go out in Series A. or Series B. SoftBank are long-term investors, although, I mean, if you look at the headlines right now, there seems to be a SoftBank IPO every month, but they do invest in those companies for a number of years. So one of the factors for us was we wanted a long-term investor, someone who was going to back our founders and their vision and not push an aggressive timeline on them, and also be able to open doors for us. We are lending to businesses and we're selling our platform to banks. SoftBank have a lot of connections in the banking community and they can open doors for us. So there's a lot of value we're getting out of that relationship outside of just pure funding.
And compared to other digital banks in the space, you're not quite the same, obviously, business focused, but a lot of banks have really chased customers, clients, whereas you've taken the more novel approach of kind of splitting into two arms and white labeling your technology. What was kind of the thinking behind that? Why did you choose to go that route?
Sure. I mean, look, in the UK, we're very, very fortunate. We're under a regulatory regime that is open to new ideas and does a sandbox and gives out different types of licenses. And people can get clouded and think, well, if it's that easy to get a banking license or an EMI, become an EMI institute, we can repeat that globally. It's not the case. I mean, as you're going to see from the applications we're seeing from the likes of Monzo, it takes years to get a bank charter in the US, and then repeat that across 100 different geographies. You're not going to get there. So for us, we made a conscious decision that this will be our home base. We'll use our bank as the proving ground for our tech platform. And we have a very profitable bank, which is the best proving case you can get. We're not selling something theoretical. And instead, we'll partner outside UK. And if you look at the US, where there are 7,000, let's say, financial institutes who could potentially be customers of us, that for us is more interesting than getting a bank charter out there and lending on balance sheet.
And you've also taken the novel approach of partnerships as well. As OakNorth Bank, you've done partnerships with Monzo and Moneybox using your banking arm to give them products. Correct. Is that also another route to maintaining profitability and standing out from the crowd? Yeah,
I mean, it's not the only driver. Because our loan book grows so aggressively every year, like billions incrementally every year, we have to bring in additional funding all the time. In terms of the depositors we have currently, they're high net worth individuals, and they meet a very kind of strict criteria in terms of we need them to have been in an address for 3 years, etc. So our CDD is a bit more stringent, and our demographic skews older. So we made a decision at the start of the year in terms of offering our product to different demographics, but through partners, as opposed to changing our core offering. So in terms of Monzo and Moneybox, they have a slightly different demographic, but they definitely skew a lot younger than ours. And their demographic is very much lower balance, but a lot more. And they want their experience to be in a single app. They want a captive experience rather than looking for the best everywhere individually and spending time on it. So for us, it's a way of broadening the appeal of our brand to a different demographic. That would be a massive pivot for us as a business. And also offering those fintechs something that they wouldn't do, because you wouldn't offer savings unless you were going to use it to fund some sort of lending, be overdraft, credit card, or a loan. So for us, it's a mutually beneficial partnership with the other fintechs, and it lowers our cost of funding as well.
And then finally, do you have any kind of words of advice for aspiring unicorns out there, or those that want to be profitable that are already unicorns?
I think the biggest thing I've learned since I've joined is to not distract yourself. Find a great idea. Do your research on it, figure out what the TAM is, the target addressable market, and when you're sure of it, you might have to pivot within that of how best to capture that market, but stick to that and don't distract yourself and be the best in the world at it. And you can definitely be, as a UK-based company, the best in the world in that sector when it's a technology play. And you can get a unicorn valuation by doing that. So I would say don't try to do everything for everyone. Don't experiment too much. Just find the right idea and hyper-focus on execution.
Well, if it's working for you, it can work for others, right?
Touch wood, yeah.
Thanks for joining me today.
No, thank you for asking the questions.
Thanks everyone for listening.
Cheers, guys.